Okay, so on the 24th of June, we had a price action based sell set up for the FTSE 100. There were a number of factors in favour of this sell setup, and I'm just going to go through them now with you, and we'll discuss obviously how the trade fared after we placed the order. So first things first, on the 25th or 24th even, we had a bearish pin bar reversal. Some of you might know this as a high test bar, an evening star, whatever you know it as. It's essentially the same thing. We've got a bar, daily bar with a tail and the open and close in the bottom third of the bar, and it's rejecting something very significant. Can you spot what it is? Well, it's this horizontal level here at 68.78, and this is no idle level. It's a soft level of resistance which has been previously tested multiple times before, all the way throughout 2014, and only recently has it broken. This is why it's referred to as a soft level of resistance, a level of resistance that has been both broken and respected. And as we've come off the all-time highs here at 7100, notably we've got this lower high here, and as we can see here with the neckline, we can see this as a double top formation with that notable all-important lower high here, which basically signifies to us that the momentum to the upside is being lost amongst the buyers, and the sellers are creeping in. Price hasn't had the strength to match the previous highs at 7100 last seen at in April earlier this year, 2015. So what is significant is the fact that price not only broke through this soft level of resistance and is now testing it as resistance since breaking through, it's also testing the neckline here of this double top formation. So what we did, as this could potentially be the start of a downward moving trend, was we simply placed our order just below the low here, minus spread, minus the extra point, with our stop loss above the high, plus spread, plus that additional point. Okay, so we had tentatively 41 points between our entry and our stop loss, and our first target was the previous swing low here. It makes sense, a high probability, lower reward trade outcome, even though the reward to risk is pretty good. If you're risking 1% of your trading account, that's a 3.9 to 1 if we're targeting this level, just an advance of 700. If you're risking 2%, then that makes a 7.9% potential gain on your trading account. Okay, so that's providing the trade goes your way. So we set our orders up on the evening of the 24th of June, and we just simply waited and waited. So the next day we were triggered into the trade, then the next day it fell like a stone, and then the day after it hit our profit target 1, and we made a very straightforward 7.9% on our trading account. And sure enough, a number of our clients did scale out of this trade and bought back half the position at 6,700, so that they can essentially bank half the profit, yet leave half the position running to the next technical level round about here, just below 6,550. Then price went down to hit that all within a day. Okay, so they realized a much higher profit potential or profit gain from this trade. And this was a FTSE. Suffice it to say, the old adage, the bull climbs up the stairs, the bear falls out the window, and this is exactly what happened in this downward moving market. Typically in bear markets, or indeed in moves to the downside, they occur a lot quicker than moves to the upside, generally speaking. Okay, so this is how we traded the FTSE 100, a simple price action based setup whereby we had a bearish pin bar reversal testing a soft level of resistance, having broken through it, and also testing it the neckline of this double top formation here, and we were simply just looking to sell the rally here in anticipation of a move to the downside the next day or days ahead.